Welcome to The Exchange. I'm Dan Riley. The Exchange is a streaming internet talk show and podcast of interviews with noteworthy people about their lives, ideas, and current events. This week I sit down with Jason Riggs, Communications Director at Kiva. During our conversation, Jason talks about the creation of Kiva, its growth, challenges, and successes over its 10-year history, and how microfinance provides small loans to those in need of economic opportunities. Welcome to the show. Today I'm in Kiva headquarters in San Francisco, California with Jason Riggs, the communications director of this nonprofit. Jason, first of all, I just want to say thanks for coming on the show and talking to the listeners.
It's great to be here. Thanks for having me.
Thank you. I'd love to start by learning a little bit about you and your personal background. How did you find out about Kiva initially, and what brought you into this organization? What got you interested in Kiva?
Well, for me, I've always worked in the nonprofit sector, working on social progressive issues and economic justice issues. And it's kind of a family trait.
Yeah.
It's something I've been dedicated to my entire life. And if my dad's a minister, my mom's a teacher, and you go back generation after generation, you find the same kind of thing of people being of service in their community. Mm. And for me, I worked in public policy advocacy for many years, where it was all about writing your legislator or raising money for political campaigns to try to get your issues forward. Yeah. And the more and more money came into politics for me, the more I got disenchanted with that kind of model of doing change making in the world.
Yeah.
And that's when I heard about Kiva from my parents. And the idea of being able to own the causes that I care about in a new way, and being able to go directly to people who were working to improve their lives, and do so in a way that was sustainable and that it didn't require going through a government or a politician to make that change. That's what got me really excited about Kiva was I could make a loan of $25 or more to someone who's maybe looking for a way to buy a solar light so their kid could study at night. I could be a part of that person's vision, a part of that person's journey, lend my money, get paid back, relend that same amount of money again to a different person, and affect change in the world in that way. And to me, being able to have that kind of an effect without the roadblock of money in politics, for example, was a really powerful thing.
Yeah. And talk to me a little bit about how Kiva came into existence. Where did the idea come from? How did the idea of what Kiva is actually get implemented in the world initially?
Yeah. Well, so Kiva.org has been around since 2005. And basically what we do is we connect people through lending to alleviate poverty. And so we do that by people lending as little as $25 and crowdfunding a loan. And so that person, whatever their loan request is, from buying a new sewing machine so they can expand their sewing business, or like I said before, maybe a solar light so their kid can study at night. It started with that very simple idea that sometimes it takes just a little bit of capital for somebody to succeed and help their life reach a tipping point. Mm-hmm. The idea started with Premal Shah, who's the current president of Kiva.org, along with Matt Flannery and Jessica Jackley. Matt and Jessica were in Eastern Africa, in Uganda, and what they saw was a lot of really entrepreneurial people. You know, we're sitting here near Silicon Valley and we think entrepreneur. We're thinking people are making the latest app or the newest website, right? But these were people with a true entrepreneurial spirit who had multiple jobs to increase their livelihood and help their kids go to school, keep a roof over their head. And they were coming up with some really creative and inventive ways to do it with very few resources. And Matt and Jessica realized that, again, with just a little bit of help, they could truly succeed. So little things like if you're a fisherman, you know, the product you can bring to market is as much as what you can put in an ice chest. So if you can buy an ice chest that's twice as big, you can double your profits. It's a really simple thing. And what they found was that there wasn't a lot of money to be able to lend to these people in a sustainable way. And that's where the idea of Kiva came in. Matt and Jessica both realized that people around the world were willing to help, and that the people who would be potential borrowers, they weren't looking for a handout, they weren't looking for charity, they were just looking for just that little bit of capital to succeed. And so when Matt and Premel, who were both from the Silicon Valley area, Matt at TiVo at the time, and Premel at PayPal, when they realized they could bring this new concept of internet money and internet good to bear to one of the world's most seemingly intractable problems, poverty, and really marry that goodwill together through Kiva, that was really the spark there.
You mentioned that it's not a handout. It's sort of a merging of a loan that people who give it expect to be paid back, but also there's heart behind it. It's the purpose of the loan is to try to get people out of poverty. Is that right?
Yeah. So the idea here is that in traditional philanthropy, what you do is you donate, and that money goes to the organization, and then the programs get provided, right? And that's a very important model. Kiva puts a twist on that, in that it's a loan, not a donation. So when you put $25 in, you get $25 back. As a lender, it's very philanthropic in that you're not making any monetary interest off the loan that you provide, the $25 or more that you're able to provide. And what that does is it makes it, that capital that you're providing, it makes it it's much easier for that money to get into the right hands, the right places, the right people, the right time, rather than more expensive, more commercial capital that charges an interest along with the principal. Gotcha. So often what people are doing with the loans, it really varies across the board. Sometimes it's being able to buy in bulk for your retail shop in your village. Sometimes it's to buy a net for your fishing business. Sometimes it's a sewing machine for your sewing business. But Kiva's been kind of evolving over time from what's considered more traditional microfinance and moving into things like crowdfunding loans for clean energy, or crowdfunding loans for tuition for students to go to school. Or experimenting with different types of loan products that go beyond the more cookie-cutter approach that microfinance has become known for.
So going back in time, I mean, the very beginning of when the first loans were being allocated, what did that overhead look like? How was Kiva actually able to make that transaction possible and know that it was going to the right people and facilitate the whole process?
Well, at the very beginning, Kiva worked through volunteers. So there was no overhead, there was no office, there was no staff people. It was just a group of volunteers for a very long time. And the thing, I think the first actual salaries were health insurance. No other thing other than health insurance for a while. But it kind of, Kiva came about at a perfect moment in time. Muhammad Yunus, who founded microfinance in the 1970s, won the Nobel Peace Prize in 2006. Kiva was founded in 2005 as a very volunteer-driven type of thing. And this is a time before Twitter existed. Facebook was still in college. People were still using Friendster. So this idea of using the internet with people's faces and transacting money was a very, very new thing. So you had this kind of new novelty of the internet. You had Muhammad Yunus winning the Nobel Peace Prize. And then just after that, Oprah featured Bill Clinton on her show. And he had written a book called Giving and mentioned Kiva in the book. And so when Oprah Winfrey was interviewing President Clinton about his book, he mentioned Kiva. And then also Frontline did a story with Kiva as well. So with that early media attention and just striking the moment just right, Kiva just exploded onto the scene and was able to crowdfund $1 million in its first year and that was up from $50,000 in 2005 to $1 million in 2006. And today, Kiva crowdfunds $2.5 million per week. So it's quite a Cinderella story in the way that it was able to grow and grow so quickly. That being said, there were a lot of challenges along the way. They were doing something that had never been done before. And one of the things that they had to figure out pretty quickly was, how do you transact money in multiple countries as to release payments and then collect repayments, right? And so the way that they do that to reach people on a very local level, even people across the digital divide, is Kiva works with a network of about 270 field partners. And field partners can be nonprofit organizations, they can be microfinance institutions, universities, social enterprises, and those people are the folks who identify the borrowers, distribute the money, administer the loan, collect repayments, and post the profiles of the borrowers on the site. So those field partners do a lot of work to make sure that there are borrowers on the site. And Kiva is basically bringing to bear the 1.5 million lenders around the world that we have to the loan requests that are sourced by those field partners. And that's the more typical model of how Kiva's been able to scale and also keep really good controls from kind of a financial audit perspective as well.
You're mentioning just the incredible growth that Kiva's had over the last 10 or 15 years, and the initial founders were, it sounded like in Uganda, where they hatched the idea or began to discuss the idea of what Kiva would become. Talk about the growth of Kiva. I mean, did it start in Africa and then expanded to other continents? How did that process work?
Yeah, so it started in Uganda, and then it slowly reached farther through East Africa, and then moved into new continents. We're in 80 different countries right now, and the growth is challenging because lending laws, are especially from international lenders, are different in every country. And in the United States, they might even be different in every state, right? So there's a lot of regulations that go along with that. An example is that typically on Kiva, what happens is you make a loan, and then there are different loan terms for every loan, depending on the field partner and the borrower themselves. But typically what happens is you make your $25 loan, and then you start getting a repayment of $2.50 every month for, let's say 10 months, right? And then so at the end of the loan term, 10 months, you're fully repaid, right. Your $25. But we wanted to go into India very much, but the regulations in India say that any foreign money coming from outside of India to be lent within the country has to stay within India for at least 3 years. So that changes our lender experience dramatically, right? If you pick somebody with a 10-month loan, but you don't get your own money back for 3 years, right. That's a really different lender experience. So there was a lot of back-end stuff we had to shift depending on different regulations. So it can appear very simple when you're clicking through the website at kiva.org, but when you start unpacking, just a few layers underneath, and you start getting into all these regulations, it gets complicated pretty quickly.
The difficulties you mentioned sounded like a lot of them are bureaucratic. Are there other cultural difficulties that you've experienced, pushback from different cultures in different countries for specific reasons, or not particularly?
There are some things that can make it challenging. So, for example, in the Middle East, we very much want to work in the Middle East and have been for a while. But culturally, the idea of putting your face on the internet, especially if you're a woman, for others to look at, is not culturally acceptable. So what we've decided to do for folks with that kind of concern is that we will blur the faces of the woman, and or somebody can be a stand-in for the woman, typically her husband or a male family member. Right. And that breaks, the connection between the lender-borrower a little bit from a visual standpoint. But we wanted to really not only honor the culture and the sensitivities around that, but wanted to make sure that the women who are being supported through these loans had the opportunity, regardless of whether or not they were willing to show their face.
Yeah. How about the great success stories? I mean, are there specific countries or parts of the world that you would regard as being the most successful? And if there are success stories, what are they?
I think everybody has their favorite. There are a few that stand out for me. There's one man who was in Sierra Leone, and he lived in a small village. There was an election going on, and he voted for the wrong person. So the person he voted for did not win. And so people who were supporters of the person who won came to his village and cut off the hands of all the people that voted against him. And so his hands were cut off, and his father spent the family life savings to rent a motorcycle to take his son to the hospital to save his life. And he's somebody that worked closely with one of our field partners, was able to get a loan for a small shoe shop business and shoe repair business in his village. And he's become so successful. He went from having no livelihood, obviously having life-threatening injuries, a terrible situation for him. And now he's married. He has a few kids. He has a very successful business, and he's making enough money that he's not only helping his kids go to school with school fees, but he's also supporting his brother's kids as well. So this is somebody who had really everything going against him, but with just a little bit of capital support and a lot of obviously effort and will on his part, was able to really move forward in his life. And that's one of, I think, one of millions of stories of people who have benefited through the generosity of the people who lend on Kiva.
Yeah. In determining who gets a loan, working with the partners that you have around the world, is the screening process very intense? I know your return on loan rate, as I understand it, is very, very high. Mm-hmm. Is that because the screening process is so difficult? And if that is the case, how do you screen people for loans?
Yeah. So we don't screen ourselves for loans. Our field partners are the ones that are doing that. So really our screening process is at the field partner level. And what we look for are microfinance institutions and other organizations that have a very strong social mission. Mm-hmm. So microfinance has grew up quickly, and the way Muhammad Yunus started it was very much about poverty alleviation, and it grew up very quickly. And then, frankly, there were some bad players, and still are some bad players in the microfinance sector, where it's all about profit motive. Those are not the partners that we choose. In fact, the profitability of our partners on average overall is a negative 1%, which means that on average, it costs them money to make loans. They're not profiting from the loans they're making. So we look at that as that social mission kind of perspective. We also make sure that their client protection principles are in place, and that the clients that they are bringing on board as borrowers are not over indebted. And that their collection practices are in line and not harsh. Mm-hmm. So I think because our field partners are truly looking to benefit their community and help grow their community in a sustainable way through the loan programs that we support, but also the social services that are being supported by the field partner as well, I think that mix of things really helps. Some people think of microfinance institutions is just like banks. You go in and the only program they have is a loan officer. But what happens more often than not on our platform is that our field partners are not only doing lending programs, but they're also doing things as varied as neonatal health care. They're doing literacy programs. They're doing health programs. They're doing business training. So these are kind of mini community centers in a lot of ways. And because of that perspective, we're dealing with folks who are being treated well, and who have the support they need to have successful businesses. Mm. That being said, not every business is a success, and not every loan is fully repaid. And some regions are just go through so much conflict or natural disasters. In the Philippines, we fund a lot of people in the Philippines, and they keep getting run over by these typhoons. So it's not a safe bet, but it's a good bet on Kiva. We do have a 98% repayment rate historically over time. So it's, like I said, it's a good bet, but not a safe bet.
Right. You mentioned, I think, that you have globally something like 270 partners at this point. Mm-hmm. Is Kiva always looking for new partners to potentially expand, or are they relatively okay with how things are right now?
I think both. One thing we've done increasingly over time, so I mentioned briefly that microfinance grew rather quickly, right, almost kind of through a cookie cutter approach, right, which is you get a loan of an average $400, then your repayments are due and start being due in 2 weeks, and then every week thereafter the loan is paid off. Like everybody knows that model. Everybody knows the risk related to that model, the default risk related to that model. But because Kiva comes in with capital that costs no money to the field partner who's administering the loan, and because we take on the default risk, so if the borrower defaults, it's the lender, our individual lenders who don't get paid back. Right. So it makes it really risk tolerant. We actually wanted to start doing something that really pushed the boundaries a little bit more. So an example is we're working with a lot of partners to do what are called bullet loans. And basically the idea is if you're a farmer and you need a loan for seeds, you're not going to be able to start paying back in 2 weeks, right? You have to wait till the harvest before your money's coming in, really. So we look at grace periods. How does that have an effect on repayment rates over time if we give a grace period? Right. Can we find partners who are willing to give loans that have a grace period? That's one example. Another example are tuition loans. Outside of the U.S. and most of the developed world, tuition loans are really rare. Yeah. They're students. There's like a 10-year grace period maybe, or a 6-year grace period. Because there are no tuition loans in that country, maybe there's no history of repayment, so you have no idea what's going to happen, and you have these loans on your books for a really long time. But again, because our capital is risk tolerant, patient, we've been working with a lot of partners to develop school loans and tuition loans. Another might be loans for clean energy products. So we're looking at how do we find really good clean energy products that are going to stand the test of time and not fall apart in a week. But will stand the test of time, help bring down the energy costs of a household so they can use that savings to repay back the loan. And then at the end of the loan period, still have this wonderful clean energy product, right? So there are a lot of different things that we're experimenting with that are pushing the boundaries of microfinance in a new way. And we hope that open up capital, and if we can prove repayments, like students prove that they are a good bet and they will repay, then that means that more commercial capital will come in after Kiva to fund tuition loans. Right. We'd love to be able to fund every loan in the world that was worthwhile and needed our support. That's not going to happen. But what we can do is kind of be the canary in the coal mine in a way, prove what works, prove what doesn't, so that more commercial capital can come in afterward and really fill the need in a way that maybe Kiva can't.
Right. I think we were talking a little bit before the interview started about the programs that you have at universities in the U.S. and maybe elsewhere in the world. If college students are listening to this interview and are interested in getting involved, they may not have capital currently to be able to invest, but they do have time and energy. Talk a little bit about the university program, how that works, how young people can get involved in what you're doing here.
Yeah, so we have a program called Kiva You. It's found at kivayou.org. And basically it's a network of colleges and universities, and also K through 12 students and teachers. So for the younger folks, K through 12, what we have are a series of curriculum so that they can be incorporated into the classroom. There's a lot of talk about Common Core. So we have a curriculum based on Common Core standards so that people can learn about math, geography, finance through the lens of Kiva borrowers. For the college and university level folks, there are a lot of microfinance clubs at different universities. There are a lot of clubs who are organized around maybe climate change, clean energy, things like that. So what they can do is they can go to kivayu.org and they can find a community of other folks who are interested in the same kind of things that they are, and trade ideas, events, curriculum, books, movies, etc.
Yeah. You also mentioned that if you could, Kiva would love to give every qualified loan a loan everywhere in the world. Is there a way to know the percentage? You're obviously making a dent in that, but is there a way to know the percentage of loans in the world that would like to get a loan that are not getting a loan right now? And we were talking about tapping the resources of university students. Is there a way to tap into the economic resources of corporations or very wealthy people to try to fill more of those loans in the world?
Yeah, absolutely. Well, the first thing to say is that loans are not always appropriate.
Right.
When a disaster happens or there's a devastating conflict that breaks the back of the infrastructure of a country or the institutions of a country, really what people need is charity, is relief. But when it's time, like in Haiti, we're talking the day after the 5-year anniversary of the Haiti quake, that's a country still trying to just become sustainable. Right. So much of its GDP is based on donation or charity, but that's not sustainable in the long run for the country, and it's not necessarily good for the country in the long run either. Right. So that's where I feel like the loan model comes in, or social impact investing really comes in, is how to build a sustainable economy for the citizens of that country. Everyone
knows about Bill Gates and what Bill Gates is doing. Is it possible for organizations like Kiva to go to very wealthy people who may not even be donating money at all to see if they can utilize some of their money to do what you're doing here?
Yeah. One of the other ways that Kiva finds support, not only with individual lenders lending like $25 at a time, is we do have corporate partners who provide loans for matching. Right. So if I lend 25, then the corporation will lend 25 up to a certain amount. And right. We're very lucky to have great partners in Citibank, Capital One, just to name a few. And those folks have been really supportive of the programs, but there's a huge need. There are millions of people who are unbanked or underbanked around the world, and microfinance and Kiva are just reaching, a drop in the bucket of that full market. So our hope is that through Kiva and other crowdfunding platforms like Kiva, that some of this unmet need can be met through the lending process.
Yeah. I'd love to also talk about what it's like. Kiva is about people, and for the people who are living in poverty, it's probably very difficult for most Americans to really understand what that existence is actually like. What is a day in the life of someone who is hopelessly impoverished like, and what can $300, $400, $500 in a loan actually do to change their daily existence?
Mm-hmm. Well, I'm not poor myself. I'm not living in that situation. I think, to me, what it means is having the passion, having the understanding, having the need, but not having simply the means, right? It's the talent is universal, but opportunity is not. And I feel like that untapped potential and that unrealized, not even dream, just livelihood of being able to make sure that your kids are going to be better off than you are. That part is the heartbreaking part of poverty from my perspective. And that if I can be a part of helping somebody bridge out of that unfairness and toward opportunity, then I've done a small piece of my responsibility in this world. And it truly is just a little bit can go a long way. I think the average median household income in the United States is somewhere around $40,000 a year. And we're working in countries where the median household income might be somewhere around $500. This is really, really different. Granted, they're in a different economy with different costs, but still, that's a long way to go. Right. One of the things I've heard a lot is just how much planning it takes to live on that little amount of money, because you can't just go to the bank and get cash in your pocket, or buy lunch at the corner or anything like that. It really is about planning way out far in advance, just your basic needs, basic needs. And the small dollar loan, there's another story of a woman who, she and her husband worked for a fisherman. So they leased a boat and they worked off of somebody else's boat. With the loan they got from Kiva, they were able to increase the amount of time they were out on the boat. And with that increased profit, they in turn were able to buy a boat. And now they have a fleet of 4 or 5 boats, really running their own business, right? So it was that first loan, that small dollar amount, that got them to be able to work longer hours so that they could, again, reach that tipping point. Yeah. And I gave the example of the ice chest earlier. If you can buy an ice chest twice as big, you can bring twice as much to market. And that makes a huge difference. If you could double your income, why not, right? Yeah.
For people like that, I mean, if the couple that rents the boats and can stay out longer and make more money, how do they find out about Kiva? How do people who are maybe not connected to the internet, aren't generally connected to technology, how do they first learn generally about what you do, and how do you see that changing as the price of technology goes down and everyone in the world, or an increasing number of people in the world, are getting access to the internet?
Mm-hmm. Well, it's again, it goes back to our great field partners that we have. Those are the folks who have the relationships on the ground and in their communities, and so they're able to introduce Kiva to those borrowers. And so these are borrowers that will go to their local nonprofit or their local microfinance institution, ask for any information about a loan. The field partner will kind of evaluate the needs of the borrower, determine if they're appropriate for a Kiva loan, because they give out other loans, right, other loan products as well. Figure out if they're appropriate for a Kiva loan or not. But as technology is developing, there's actually a lot of really cool stuff going on. So one of the new programs at Kiva is a program called Kiva Zip. And it's a program that we're piloting here in the United States for loans, as well as in Kenya. And we chose those 2 countries because we have staff people in both countries, and because both countries have a really robust online payment systems. In Kenya, it's called M-Pesa, and M-Pesa is basically phone credits that are transferable from one phone to another, and people are using it as if it's currency. So instead of spending 50 cents on a soda at the corner market, I'm spending 50 cents worth of phone credits that I transfer to that local shop owner's phone from my phone. And so we're doing loan payments and repayments via M-Pesa in Kenya. And here in the US, we're using PayPal. And because we're doing it in this more direct model without field partners, we're able to offer these loans at 0% interest and no fees. Here in the United States, what we focus on are small business owners who are financially excluded in some way, and or who are doing social good through their small business. Okay. An example of folks who are maybe financially excluded here in the U.S. Are folks who maybe their credit history is too young. Maybe they're a young person, maybe they're an immigrant or a refugee. Or maybe their credit history is damaged in some way. I don't think many people came out of the recession without some kind of damage on their credit report. And we also know that lending has been drying up for small businesses, especially the smallest of small businesses here in the United States. And we also know that small businesses create 2 out of 3 net new jobs in the U.S. And so when we look at Main Street recovery and we look at job creation, we're really looking at small businesses. And I would say, the small businesses, those types of jobs are local jobs. The jobs reports we have out right now are fantastic. The shadow side of that is wages are stagnant, if not shrinking. People aren't getting all the hours that they need. So people are looking to augment their income in different ways. And they do that either through getting a job at a small business locally, or they do that through starting their own small business. And that's really what Kiva Zip is designed to help provide, is people who, for some reason, are on the raw side of the deal as small business entrepreneurs in the United States, and giving them a glimmer of hope through a small dollar loan to help them start or expand their concepts. Yeah.
Last question I want to ask you. You mentioned that microfinance grew up very quickly, and Kiva's only been around for 15 years. I mean, less than 2 decades, I think. Where do you see Kiva going? Is Kiva just at its very beginning, or is Kiva about where you think it can be? How does the future look for Kiva, and what are its long-term goals?
I think we're just starting. Yeah. I really do. I feel like when we first opened the doors in 2005, it was this incredibly innovative model that really captured people's imagination. And with the experiments we're doing, with the tuition loans, with the clean energy loans, with agriculture loans, and also with small, medium enterprises. So we're looking at crowdfunding socially responsible, socially mission-driven small, medium enterprises in emerging economies. So, for example, in Haiti, we crowdfunded a $100,000 loan for a business that's going to create 300 new jobs in Haiti, help with work against soil erosion, and that's sustainable and will grow over time. So we're crowdfunding these small, medium enterprises that are doing really good work in emerging markets. And the more we're able to do that, plus all these other small experiments, I think we can really transform what is achievable in the social enterprise space, the small, medium enterprise space, plus all the creative micro lending that we're doing right now. As technology develops, the Kiva Zip program, that here in the U.S. has the potential to radically transform how small business owners access credit. Yeah. So if we can prove that a FICO score alone does not determine whether or not you're creditworthy, imagine how many more people would be able to pursue their small business dream, right? If a previously incarcerated person can get a $10,000 loan to start their job placement business for other previously incarcerated people, and have that business be successful and have them successfully repay their loan, it's gonna change things. Right. Absolutely. My hope is that our ideas get stolen, frankly. If, like I said, if we can prove that social lending on Kiva Zip will result in a still robust repayment, even if we ignore credit scores, if we can prove how that works, then I hope every bank steals that idea, because that means more and more people will have access to the credit that they've already earned in their community and through their work and their reputation, and not just, a credit score that gets dinged every time you even look at it, Yeah.
Jason, thank you so much for coming on the show and talking. I really appreciate it.
Yeah, thank you. It's great to be here.
Thanks for listening. If you're interested in learning more about the Exchange, want to listen to episodes online, or would like to reach out to the show, feel free to visit the show's website at theexchangeshow.com.